Nvidia's stock price is down over 19% year to date in 2025. Add to that the increasing geopolitical tensions, its relationship with China and the United States, the company's dependence on large cloud service providers for spending on data centers optimized for AI, and you're seeing an increasing list of worries for Nvidia stock investors. That's why I thought it'd be a good time to conduct a risk analysis for Nvidia stock, just to get our hands around all of the risks, or at least three of the most important risks right now for Nvidia stock investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I mentioned in the introduction, Nvidia's stock price going almost straight down after an initial rise of 12% to begin the year in 2025. It's now down over 19%, almost the most it's been down so far in 2025. So one of the most prominent risks for Nvidia of late has been the regulatory challenges in China and the export restrictions placed by the US. China's new energy efficient rules could disqualify some of Nvidia's processors, and the market, even though Nvidia's sales to China has been declining as a result of multiple export restrictions from the United States, it still contributes about 13% of total revenue to China. So it is a meaningful part of its business. Nvidia is still trying to capture a share of the market, even with its not so latest and greatest technology that it's been restricted from selling into China, which brings us to that next risk, which is the blacklist. The US has added several Chinese companies, including Nvidia's major customers, to a blacklist, raising national security concerns and potentially affecting and already affecting Nvidia's business operations in China. And most notably, of course, you've probably been hearing about all of the tariff announcements from President Donald Trump. These aggressive tariff plans and concerns about further export restrictions on AI chips could significantly impact Nvidia, given its substantial revenue from not just China, but all other countries as well. Nvidia's business is international. It generates significant percentages of revenue outside of the United States and even outside of China. If the countries that the United States implements restrictions on or tariffs on, they could retaliate by blocking some of Nvidia's products from entering the country or adding tariffs to Nvidia's products that are entering the country. Of course, maybe the biggest risk is Nvidia's dependence on data center GPUs. Their customers include Microsoft, Alphabet, and Amazon. Those are the three largest customers, but they also sell to companies like Meta Platforms and Tesla for their investments in their artificial intelligence to help improve their business operations. So if any of these hyperscalers or large businesses cut back on their spending to Nvidia's products, that could serve as a big decline in revenue for Nvidia. Its large concentration to relatively few customers is a risk for Nvidia stock investors. And that's why you've noticed me covering a lot of the spending plans for those large cloud service providers because of how important those plans are to Nvidia stock investors. Also, these large cloud service providers are spending money in creating their own chips so that they can reduce their reliance on Nvidia's products. They don't like the fact that they have to spend billions and billions of dollars on Nvidia's products, and that Nvidia is exercising strong pricing power. As you can see from Nvidia's profit margins, its gross profit margin is above 70%. So that's a large profit margin, and its customers are not happy about that. So they're taking action to reduce their reliance on Nvidia, and that's a risk for Nvidia. If Nvidia, as Nvidia's management has said, can shift some of that spending to become more broad and include more customers, that will reduce this big customer concentration risk that I'm talking about here. And of course, geopolitical and trade tensions are top of mind for Nvidia stock investors. The biggest one could be Nvidia's reliance on its manufacturing partner, Taiwan Semiconductor. Any impact to that relationship where Nvidia is able to outsource nearly all of its manufacturing to Taiwan Semiconductor, if there's any disruption to that supply chain, that could be a huge downside risk for Nvidia stock investors. The company relies on Taiwan Semiconductor for the majority of its products, the most valuable part in its supply chain. And Taiwan Semiconductor, even though they are investing in the United States as a result of those geopolitical concerns, they want to have a presence in the United States because some of their largest customers are US based companies, including Nvidia, AMD, and of course, Apple. So Taiwan Semiconductor is also taking steps to lower these geopolitical tensions, to lower the risk profile of these cross-border transactions. But those risks remain. Those risks remain, and that's something that could rise to become an even more important risk to Nvidia stock investors. So I've covered three large risks for Nvidia stock investors. But already, if you look at Nvidia's valuation, it's trading at a forward price to earnings of 19, which is near the lowest this stock has traded for going back several years, according to this valuation metric. So much of these risks that I'm highlighting here have already been priced into Nvidia stock. Nvidia stock investors are not extremely enthusiastic about the company's future prospects. If anything, I would say stock market participants are growing increasingly concerned about Nvidia's prospects for future growth. Nvidia stock investors are taking a step back and saying, well, much of the valuation already accounts for the fact that it's going to generate all of these billions in free cash flow from the expansion of data centers optimized for AI. And investors are now looking for something else to drive an increase in valuation, and further developments in artificial intelligence, in large language models, is not driving the support in Nvidia's share price that it previously was. Regardless, I still think Nvidia at this current valuation is a great value for long-term investors. And even though the near term I expect will remain volatile, there can be a lot of risk in the near term, a lot of price fluctuation, but I think those can be opportunities for investors to scoop up shares of Nvidia stock at lower valuations due to the increasing fear in the marketplace. I'm excited to announce a brand new private Discord to our channel members at the VIP Discord tier. It's a great place to directly connect with me, ask questions, and engage with a community of like-minded investors. Spots are limited, so join us today.